The CI Munro Global Growth Equity Fund delivered a negative 1.3% return for the first quarter of 2021, underperforming the MSCI World All Country Index in Canadian dollars, which delivered a positive 3.2% return. Our returns were made up of an 80 basis point contribution from equities, but a negative 2.1% return from the strengthening Canadian dollar. Global equity markets had another positive quarter in March. However, the strong market performance actually masked significant volatility under the surface, as expectations of a strong economic recovery saw leadership in the market rotate aggressively towards more cyclical stocks, at the expense of longer duration assets like bonds, gold, and growth equities. And look, despite the derating in growth equities, fund performance actually held up quite well, delivering a positive return for the quarter. From a stock attribution perspective for the quarter, positive contributions came from our high-performance compute leaders in ASML and TSMC and Micron. Detractors for the quarter included some of our e-commerce companies like Alibaba and Amazon, some of our software holdings like ServiceNow and Twilio, and also a number of our climate names such as Vestas Wind Systems. On equity markets more broadly, we remain positive. COVID-19 ending is good for growth and good for corporate earnings. The rotation we saw through the first quarter is really just a function of a broadening of this economic recovery, and it is somewhat understandable after the bifurcated nature of returns that we've seen over the last 12 months. In the long run, however, it is always earnings that drive stock prices. And to that end, we are looking forward to the upcoming reporting season and the quarters ahead, where we expect our core holdings across digital enterprise, e-commerce, climate, high-performance computing, and finally emerging consumer to deliver strong quarterly results and also strong outlooks as they benefit from the improving recovery, which should drive their earnings into the future.